There we go. Shall we get started? I'm aware that the first part of today very much is going to be me speaking at you. Do bear with me, and I'll try and make this as exciting as I can. So aims of today, hopefully we're going to demystify what fossil finance is, and as I said, just dip our toes into how we can use it as a tool. Hopefully also going to begin exploring some of the tools that we can use to figure out who our fossil finance targets might be. There's some really cool tools to help us with that. So just as really basic introduction here, if I was to break down to all of you the idea of fossil finance into its most basic definition, I would tell you that it's a really clever tool that we've got that can help us undermine fossil fuel companies and stop oil and gas expansion. Um, Not solely oil and gas, though. We've realized, actually, since the sort of formation of the divestment movement, I'll speak about that in a minute. Um, it hasn't just been oil and gas that we focused on. It's always been other big industries. We can remove the finance from any terrible industry if we really try hard. So while a lot of this is referred to as fossil finance, I'm also going to talk more broadly about the arms trade, the prison industrial complex, detention centres, and trying to take money out of all of these things. Um, so the way that fossil finance can help us undermine fossil fuel companies is by focusing on the financiers that make these fossil fuel projects and companies viable in the first place. So what I'm talking about here is the banks, the investors, the insurers, and all of the big global financiers who are literally pumping billions every single day into destroying the planet. So despite all of the science that we now have and all of the outcry from the general public, these financiers are continuing to invest money into fossil fuel companies and projects. And that is quite simply and clearly because it results in really big profits for them. And not just them, but their shareholders, their CEOs, and everyone whose pension might be tied up in those investments. And we are talking about financiers of all sizes here. So I'll try and break this down a little bit. But if you think from like the biggest global banks to your local council's pension scheme to a really small investor, the vast majority of them, a good 99%, are going to have some involvement, some money tied up in fossil fuels. I learned recently that even the World Bank does. Um, Yara's just shared my very silly slide here, the spectrum of worry versus the gradation of confidence. I'm hoping to move you all today from a 0 or a 1 to at least a solid 6 or a 7. In terms of what you understand from fossil finance, you don't need to retain all of the information. As I said, I'll record it, but just hoping that you leave with an understanding of why it's useful and how it can be applied. So, um, who was it earlier who mentioned living in, was it Basel? Who was that? I can't remember your name. But thank you for mentioning that because with Switzerland being a major financial hub, very relevant to what I was about to say. Like in particular, the City of London hosts about a third of all major financiers globally. And that's not just banks, it's also asset managers, it's insurers, investors, pensions, stock exchanges, the bond market, all of these horrible things that you've heard about. Don't want you to worry too much about these words right now. But here in the UK and also across a lot of Europe, in these financial hubs, we've got a really unique opportunity. Like most of us are within reach of a major financier, which is propping up the world's oil and gas industry. And as I mentioned, not just oil and gas, but also, for instance, apartheid, genocide, arms creation. Um, so even outside of London, we've got major high street banks and branches of major oil and gas investors literally in every town and city in the UK, and that's much the same in many parts of Europe. So we've been repeatedly asked by communities in the global south um, that this is kind of what they're calling upon us to do is really focus on fossil finance. We have the ability to touch these buildings. We have the ability to go in and speak face to face with the directors of these buildings. We have the ability to disrupt them, disrupt their AGMs. And that's a really unique opportunity, yeah, to pull global finance out of oil and gas. So just to talk quickly here about the history of fossil finance as a concept, it's very much got its roots in the global anti-apartheid movement, which is why it is so wonderful to hear so many people talking about Palestine and wanting to bring in a fossil finance lens into that work. It very much harks back to its roots. So that was starting in the 1970s when communities all around the world were coming together to buy up huge amounts of shares in Barclays, in Shell, in order to pressure them at their big annual general meetings to stop funding the South African government. And this technique was successful. It did take them 16 years from when they first started it, but eventually Barclays did pull out. And afterwards, the divestment campaign really took off in other areas. Since then, we've modified and we've built upon and improved this model to challenge not only banks, as I mentioned, and not only apartheid regimes, but all financiers that are investing in a really wide range of horrendous things. As I mentioned, from the arms trade, fossil fuel expansion, private prisons, the scope is really wide and unfortunately completely interconnected. We often find that the same banks that pour billions into oil and gas are exactly the same banks pouring billions into the private prison industrial complex, for instance. It's very rare to find a bank that won't invest in all of these awful things all at once. Can you please give me a new slide, Yara? So focusing more on fossil fuel expansion, the reason that fossil finance is such a successful tool is because the language of money and investment often makes a lot more sense to these financiers than when we are to try and employ the language of morality and ethics, right? So we know if we go directly to Shell or Equinor or Glencore, these huge energy companies, we go to any of these global fossil fuel company giants, and we ask them politely or not so politely to stop their projects, they're really unlikely to give in to our demands to stop fossil fuel expansion. And that's because it's written into their very business models. But if we approach the banks and the investors and the insurance which finance these companies, we can kind of turn off the money pipeline at the start, and we can do that through a whole host of tactics. So as I said, we know from experience that if we go to Barclays, for instance, and we say, hi, pals, you're investing a lot of money, which is killing the planet and communities, it doesn't move them. They don't care. But when we damage their public reputation and we begin to influence their consumer base, then they really start to pay attention. It's much easier to get a financier to pull money out of oil and gas than it is to pressure an oil and gas company itself to halt a project. And the same logic can be applied to the arms trade, for instance. And that is because the financiers have the ability to put their money elsewhere. Now, that is a whole other conversation that we can maybe touch on later. But just to move on for the time being. So when we've got proposed fossil fuel projects, I'll give you an example here. Some of you may have heard of the Rosebank oil and gas field in the North Sea. Not only does it cost huge amounts of money to actually build that fossil fuel infrastructure, Rosebank, for instance, that will cost billions to build the platforms themselves, to do the groundwork needed to extract those resources. But that's like before you even see a drop of oil or any profit. But these projects also need insurance. Insurance is often a piece of fossil finance that is neglected. We often don't look at it closely enough. We're thinking so much about the finance, but equally insurance is really necessary for these projects because they're super risky. If you think of every oil spill, environmental disaster, health and safety disaster that happens in the fossil fuel industry, everything that's ever occurred, it costs huge amounts to insure these projects. And without insurance, these new oil and gas infrastructure builds simply cannot go ahead. They just don't work. So for every fossil fuel project, we've got banks that are lending money to build the site. We've got insurers that are putting money behind insuring the site, and we've got investors and asset managers that are pumping money into the project directly through investments. And all three of these are hoping that if everything goes to plan, they're going to get their money back and more once that sweet oil or gas starts coming. So quickly, while this has historically been the case for fossil finance, in terms of the profits that it makes for these companies, as climate change progresses and the impacts become not only more visible, but fundamentally more costly, in particular from an insurance perspective, and as more and more people around the world recognize that investing money in fossil fuels is a really shit thing to do, this form of financing is actually getting more risky. It is becoming less favorable and it is becoming less worthwhile. But we're at kind of this crucial point right now where we have this huge role to play in further undermining this in order to fully defund new fossil fuel infrastructure projects. Can I have my next slide, please? Thank you, Yara. So I'm just going to put this into context for you all. If we take Shell, for instance, a huge, mega, massive global fossil fuel company whose very business model relies upon fossil fuel expansion and extraction. If we ask Shell to stop, we're not likely to get anywhere. Activists have been trying to do this for years to varying levels of success, but mostly very limited results. So this new project is going to be how they make money. Let's say, for example, they're building a new oil well in Zimbabwe. We asked them not to. They're not likely to pull out. So Shell would be our primary target. And that's because they directly have the immediate ability to stop the project. Other primary targets might include the government of that country, who also have the ability to stop that project. But yeah, we know that this is extremely unlikely. So what then if we move on to secondary targets? And by secondary targets, I'm referring to the financiers behind Shell. So we're pressuring the banks, the investors, and the insurance providers to then stop that project, that oil well in Zimbabwe, in its tracks without us even needing to speak to Shell. So just to recap there, our primary targets are those who have direct decision-making power. So our primary targets directly have the power to give us what we want. Often they won't. So then our secondary targets come in. And those are the ones that have huge amounts of influence over our primary targets. The banks, the asset managers, the insurers. Okay, let's move on to looking at banks. Okay, so you've probably all encountered campaigns recently asking people to move bank. For example, recently, a lot of Palestinian campaigners have been urging Barclays customers to change bank due to the way that Barclays invests in Israeli arms manufacturing and surveillance technology. This isn't a new concept. It's been happening, as I said, since the 70s, a good 50 years now. But different banks invest in slightly different ways and have slightly different policies regarding what they will and won't invest in. So the bottom line here is not all UK banks are created equally. But what's really, I guess, the silver lining here for us is that banks are public financial institutions. All of us store money in them, or most of us do. And public is the key word there. With banks being public institutions, they are subject, at least in the UK, to some regulation. That is done by the UK's Financial Conduct Authority, but the majority of other countries also have some kind of regulatory body which looks at public banks and limits what level of risk and investment they can make. I've got one important technical differentiation to give you all here. I know it's a bit wordy, but bear with me because I promise it's worth understanding the difference. So the difference between project finance and corporate level finance. I know I've probably already turned some of you off with how boring these words sound, but as I said, bear with me. So project finance refers to when a bank gives money to an energy company to spend on a specific fossil fuel project. So, for example, Barclays might go to Glencore. Glencore are a big energy company, and they might say, here is £100 million for you to spend specifically on your new South African oil field. Okay, so that is finance that's going specifically towards a project. Corporate level finance refers to a bank lending money to an energy company to pretty much spend on whatever they like. There will be some restraints, but I'm putting this quite crudely for you all here. So the example would be that same bank, Barclays, goes to the same energy company, Glencore, and they say, here is £100 million to spend however you like. And the difference here is if Barclays give corporate level finance to Glencore, then technically speaking, they can say that they haven't directly funded new oil and gas projects. And that's a really important tidbit there. I don't normally include this, but I am today. I'm going to just quickly focus a little bit on Barclays in particular. I know I've been picking on them a bit today, but that's because they recently came out with a new oil and gas policy. Some of you may have seen. Can I please have another slide, Yara? So as I mentioned, particularly relevant at the moment with Barclays. Barclays a few weeks ago, for those of you who didn't see, they came out with the shiny new oil and gas policy. And prior to this, Barclays were way, way, way behind other UK banks in terms of meeting climate targets, completely outlier. And they've been subject to loads of activist demonstrations and pressure and efforts over the last few years, quite rightfully, because their climate targets have been so way off. So I want to spell out to you why this new announcement actually isn't the win that Barclays have painted it out to be. The press have really loved it. Um, I'll start with the one win, the one good thing that has come out of the new Barclays oil and gas policy. They have agreed to rule out financing what is called pure play energy companies. So a pure play energy company is an energy company who only build fossil fuel infrastructure. They've got no interest in renewables or diversified energy. They only build fossil fuels. So Barclays will continue to finance what's called diversified energy companies. So in contrast to pure play energy companies, diversified energy companies are ones that build a mix of renewable and fossil fuel infrastructure. They are still pouring carbon into the atmosphere, make no mistake about that, but they do build a little bit of renewables on the side. So Barclays have said they'll no longer specifically and directly fund fossil fuel projects through project finance. So if we look here, Barclays have said no to pure play energy companies, but they've said, yes, we'll carry on funding diversified energy companies. And what they've said is we'll no longer deliver project level finance. So Barclays, in a sense, have said we're going to stop giving specific finance for fossil fuel projects. But what they have agreed to do is to continue to provide corporate level finance. And this announcement came out a few weeks ago. Over the last few years, 99% of Barclays investments have been corporate level finance rather than project level finance. So really, at the end of the day, we're talking about 1% of their investments being affected by this new oil and gas policy. It's really shit. um, and the only kind of measure that they have put in place is for corporate level finance, for these diversified energy companies to receive that finance, they have to fill out some really silly, non-legally binding net zero commitment. Doesn't mean anything. So I just wanted to spell that out to you because lots of people have been asking me lately about Barclays. I'm going to do a training specifically going into the ins and outs of this. But as I said, the too long didn't read here is that the new Barclays oil and gas policy is shit. And it's only just about brought them into the 21st century in line with other UK banks where they're at. In terms of carbon in the atmosphere, this really isn't going to change anything. Sorry for the little Barclays segue there. Let's move on to insurance because this is super easy. I'll keep it really simple for you here. In the UK, when it comes to insurance for fossil fuel projects, but also things like the arms trade, the only name that you need to worry about is Lloyd's of London. So Lloyd's of London are this incredible marketplace for insurance. So if you think about the website Amazon and how they function as like an online marketplace, Lloyd's of London works the same way for insurance providers. So it's this huge building in the middle of London, and within it sit all of the UK's major insurers. I mean, like every single one of them. It's where they all do business. They're all best friends. They go on cute little dinner dates together. Lloyd's of London, unsurprisingly, was set up completely to ensure the transatlantic slave trade. And since then, it has continued to ensure the demise of civilization. This figure is debated at the moment. We're currently doing some reassessment of it. But as things stand, we think that Lloyd's of London insure around 40% of fossil fuel projects worldwide. So within Lloyd's of London, there are what we call 70 syndicates. And these are just these cute little partnerships of big insurers who become best friends to super insure super bad projects. And luckily, I said I'll do a deep dive training for anyone who's interested in the insurance world. Luckily, as organisers and campaigners, we've really cracked Lloyd's of London in terms of a strategy for being able to push these 70 syndicates out of insuring bad projects. We've really got a strategy down for that. And we've had a lot of progress doing it. So if you're interested, I can definitely do another training, specific deep dive exploring that another time. Can I please have another slide, Yara? I'll move on quickly to our investors here. So yeah, we've got our gorgeous investors next. And the key difference here between investors and banks, I mentioned that banks are public. Investors are private financial institutions, and they're not regulated by the UK government. They can invest in whatever they like and however they like. And this is really attractive to super rich people and clients because investors can invest their money in supremely terrible and really risky things that public banks just would not touch. So hence rich people, rich clients get a lot more profit from investors and they're really attracted to it. Investors is this ludicrously broad term which covers a lot. I've included these 8 examples of what investors look like. Don't worry about this too much. We could do a training deep diving into every single one of these in and of themselves. If anyone wants that, I can provide it, but I'm not going to do it today. I am going to quickly talk through asset managers, specifically for those of you from the book world who are interested in Baillie Gifford just now. That seems particularly relevant. So, Yara, can I have my next slide on Baillie Gifford? Thank you. Okay, so Baillie Gifford is an example of an asset manager. As I mentioned, that's a private financial institution, and they basically manage wealth on behalf of really rich individuals and companies. So a rich person goes to Baillie Gifford with all of their millions of pounds and says, here's my money. I will pay you a small amount to invest all of this money on my behalf and make me more profit in 10 years' time, for example. So the world of asset managers is ridiculously sketchy. Most of their investments aren't publicly available and they can be really hard to track down in terms of where that money goes. So asset managers like Baillie Gifford invest in a whole host of ways. They offer different investment packages for different clients depending on, for example, the level of risk or the time frame that they're going to have hold of that client's money, the amount of money being put in, a whole host of crazy things that rich people seem to understand. But generally, asset managers, including Baillie Gifford, are investing in whatever industries are the most profitable at that time. And that more or less always includes things like fossil fuels and the arms trade, as well as other horrific industries like prisons, detention centres, border and surveillance. Just horrible. So Baillie Gifford isn't included in the world's top 10 biggest asset managers. That's more like the likes of Vanguard and BlackRock are names that some of you may have heard of. But the 10 biggest global asset managers have a total of $2 trillion invested around the world in various industries. The majority of that is probably really sketchy and not so good. So like the game of asset managing is absolutely no joke. In the case of Baillie Gifford, the way that they go about advertising their financial services to clients and the way that they try and get themselves a really good public image is by sponsoring events, which those of you in the book world are very familiar with right now. Baillie Gifford sponsor the Edinburgh Book Festival, for example. So, in terms of actual tactics, I realized that was a really quick introduction to the world of banks, insurance, and investors. But thinking more positively about how we can and do disrupt these financial systems. There's loads of ways that we do this. It relies on different theories of change. Different groups will try different things. But in particular, we've got reputational damage and customer perception. They're huge ones that really impacts a financial institution's client base, but also media coverage and framing. Like, how do we in the public talk about, for instance, Barclays in recent years? We've really dragged it through the mud in terms of media and framing. The next one down, my favorite, is pressuring a named target. So something we're not so good at. I'm going to use the example of Baillie Gifford here for those of you interested in them. When we talk about targeting Baillie Gifford, doesn't mean much. Who are Baillie Gifford? Who are we actually trying to talk to? Who has the power to meet our demands and meet our aims? Baillie Gifford, if you use Baillie Gifford as the target, it really lets them off the hook. It doesn't hold anybody to account. So really thinking, okay, well, who within Baillie Gifford has the power to meet the demands I'm asking? Is it a certain sustainability officer? Is it the person that's responsible for sponsorship deals, for instance? So I would really encourage you to think about naming your targets, not just in fossil finance campaigning, but in all forms of campaigning. I think it's really effective. Of course, digital actions, I've been skeptical about them in the past, but actually in the world of insurance, it's been great. And obviously we've got our good old fashioned civil disobedience and direct action. Glorious, gorgeous. I'm going to give you a quick example of these fossil finance strategies in action, starting with the example of the East Africa crude oil pipeline. Some of you may have heard of that project. If you haven't, please do research it. It's a really scary project. This huge heated pipeline that's due to go right across East Africa, displace hundreds of thousands of people, decimate national parks and wildlife, and local people won't see a penny of that profit or that oil. So the way that we've gone about in the UK trying to stop the East Africa crude oil pipeline from happening, first of all, we had a look at who are the banks that are involved, and we realised, okay, the banks involved are the Chinese National Overseas Oil Company, and also Total Energy based in France. That's the energy company. So we haven't really got any banks or investors that are based in the UK that are very heavily invested in ECOP. But what we do have is this undercover research that's shown that the East Africa crude oil pipeline is very likely going to be insured by Lloyd's of London. So what we've done is we have targeted every single one of those syndicates within Lloyd's of London. We've put huge amounts of pressure on the individual insurers to make them pull out of insuring the project. And to date, I think it's about 30 of those key insurers, really, really big ones, have fully agreed to not insure that project. And that's a huge deal because it's caused really significant delays to this project going ahead. We haven't fully managed to stop it yet. You know, we're trying multiple different avenues, but in the UK, that's been immensely successful. So if you can see here with my silly little lines I've drawn on this slide, we've managed to bypass trying to negotiate with Total Energy or the China National Overseas Oil Company, and we've directly just cut off the insurance, which means that the project has been delayed really significantly. I should update this slide. I think it says 21 insurers, but yeah, that's now close to 30. I'll give you one more example. And that is, I mentioned earlier, the Rosebank oil and gas field in the North Sea. The North Sea is absolutely littered with oil and gas licenses, but Rosebank is the biggest one. It's absolutely catastrophic. If it was to go ahead, it would produce the same emissions as the poorest 28 countries of the world combined every single year. So we're really trying to stop this from going ahead. There are two energy companies that own Rosebank, Equinor and Ithaca. And similar to my silly diagram with the silly lines previous, we're trying to avoid speaking to Equinor and Ithaca directly because we know it's not going to work. And instead, we're trying to focus on the insurance, which is likely to come from Lloyd's of London again, and the banks that include Barclays and Standard Chartered. I will probably do another deep dive specifically into the fossil finance strategy behind these two projects in the future, but just to very quickly touch base there. I realized that that was a lot of me speaking. If you could give me the next slide, Yara, and I'll just move on to some of our tools. Thank you. So there are some really cool tools that we have at our disposal for finding out who our potential fossil finance targets might be. So the first one here, when it comes to banks, we've got the Banking on Climate Chaos report. If you just Google that, it comes straight up. I think it's just bankingonclimatechaos.com or .org. And it's this absolutely fantastic resource where you can break down every public bank in the world and every energy company in the world and see who's tied to where, what money is coming from who, how much did certain banks give to certain energy companies in any given year. It's an amazing resource for thinking about finance targets. Another resource we've got below it, when it comes to the world of investors, I mentioned that it's really sketchy. So we now have this new resource called Investing in Climate Chaos, very similar to the Banking on Climate Chaos report. And that again is another website that you can access, which shows all of the different biggest investors in the world, including the likes of Baillie Gifford. And it shows what investments they hold in certain oil and gas and coal projects. Unfortunately, that resource doesn't quite extend to other industries, but there are ways of going about finding out where investors might put their money. Unfortunately, I wish I could give you all a really easy answer when it comes to insurance. The world of insurance is just a wild west. Like, it is so hard to track down who insures what. Me and Yara have recently been doing a big piece of work trying to figure out who is insuring the UK's border and surveillance industry. And it has really come down to us Googling the name of each individual insurer and the name of each project to see if we get anything on Google. Like, you really have to go to quite serious investigative lengths to figure out who is insuring what. As I said, there's a good guess that Lloyd's of London will be insuring projects, but to find out specifically which... Thank you, Michael, for sharing that resource in the chat. to find out specifically which insurer within Lloyd's of London is insuring which project is immensely difficult. I'm going to leave it there if you're okay to stop sharing slides for now, Yara. And just take a second there. I realized that was a lot of me speaking. Can I check if there's any questions just now, or if there's been any questions posted in the chat whilst I was speaking, and I will just stop the recording.